back to the channel. Here in this video, we're going to be going over some time-sensitive information surrounding Nvidia earnings, what to expect, and my expectations. Nvidia earnings come out in just the next couple of hours. So I'm filming this video beforehand, so hopefully to give you guys a better reference or preference of what to expect and potentially how I am trading this event. We will also go over all of your Tesla stock breaking news today, in which there's quite a bit of it. Now, first things first, I will mention Nvidia and other big tech stocks. They are down in anticipation of Nvidia's earnings. This is pretty typical of Nvidia earnings, of major catalysts, especially after Nvidia's rallied so much, almost 50% from bottom to top. It's not surprising that some people are taking a little bit off, heading into Nvidia earnings because there is so much on the line. It's not surprising some people are hedging out their positions heading into Nvidia earnings. This article from the AP, the Associated Press, says all eyes are on Nvidia as it prepares to report its earnings. Here's what to expect. It says here, Wall Street expects the company to report second quarter adjusted earnings of 65 cents per share, up from 27 cents a share a year ago. Revenue is expected to have surged to 28.74 billion, more than double what it earned in the comparable quarter 1 year ago. By comparison, S&P 500 companies overall are expected to deliver just 5% growth in revenue for the quarter. So expectations are very high, especially on this top line revenue figure, in my personal opinion. I think really to impress Wall Street, Nvidia is going to have to come in over $30 billion. Can they do that? Of course they can do that. The problem, critics say, is such stellar growth has set off too much euphoria among investors. Through the first 6 months, Nvidia's stock soared nearly 150%. At that point, the stock was trading at a little bit more than 100 times the company's earnings over the prior 12 months. That's much more expensive than it's been historically and then the S&P 500 in general. That's why analysts warn of a sell-off if Wall Street sees any indication that AI demand is waning. And that's really the key here. Obviously, if Nvidia missed on revenue or profitability, Wall Street would not like that. That would be bad. But it's really about the guidance going ahead. Now, I will also say over the next coming quarters, the year-over-year comps, the comparables, get a lot tougher. From Investopedia, it says Wall Street is broadly bullish on Nvidia stock ahead of its Wednesday earnings report. Nearly all the analysts covering the chip giant have buy or equivalent ratings on the shares, according to Visible Alpha, and it says the street's mean consensus price target implies a 14% premium to today's price. And we are expecting to see a swing in market cap of around $310 billion after this report comes out. Scott Rubner, managing director at Goldman Sachs, noted that, quote, the bar for Nvidia this earnings season is a lot lower than it has been in recent quarters due to fundamental selling in the tech sector. Nvidia holds the record for the biggest one-day market value swing at $330 billion, which occurred in late July. According to the bank, if Nvidia reports strong growth and forward guidance, it could surpass or surprise the stock market and lead to a significant move. Can you imagine if Nvidia beats expectations on Wednesday? Interactive broker strategist Steve Sosnick emphasized Nvidia's integral role in the market, noting that more than 70% of the 25 most active trades on their platform have a connection to Nvidia. Sosnick stated, quote, we've gotten quite used to seeing Nvidia atop the leaderboard most weeks, cementing its key role in investor psychology. Kevin Mon, CIO of Henian and Walsh, anticipates that Nvidia will surpass expectations, especially in its data center business, further solidifying its dominance in the AI sector. However, some analysts caution that Nvidia stock might face short-term setbacks. Gene Munster, managing partner at Deepwater Asset Management, points to potential supply-demand imbalances and delays in the Blackwell project, which could negatively impact investor sentiment despite the company's long-term growth prospects. Technical analyst Carter Braxton Worth remains bullish on Nvidia, advising investors to adopt a long-term strategy around the earnings period. He believes the company's stock will continue its upward trajectory based on technical indicators. With that said, I think this earnings from Nvidia is so important as well because September is such a weak seasonal month for markets. Over the past 10 years, you have been down in September on average 2.6%. Over the past 4 years, you were down 4%, and that was the best September since 2020, negative 4%. The worst September has been down about 10%. That's just not a good track record for September. We also have election risks coming up here. If Nvidia does not blow out expectations, I would expect at least some decline. 3 to 5% of a decline would make sense, even if Nvidia meets expectations. But it's not a blowout. And I think that could be the risk here in our markets. Now, obviously, I think with earnings we've gotten from AMD, TSMC, many other AI adjacent companies, you've got a pretty good indication that Nvidia is going to report numbers that are just fine. But the question is, are they blowouts? And I don't know if I'm certain we're going to see blowouts. But hey, it's possible. I think the risk is skewed to the downside here, in my personal opinion, especially after what we are kind of seeing today. Wall Street's getting ahead of Nvidia earnings by selling really all of big tech. So I do think a small downside protection play could make sense heading into this earnings, but I don't think this is the blow up disaster. Could be wrong. I mean, if guidance comes in light, you're definitely going to get a smack in the face. That's for sure. But what are the odds of that? I still think they're pretty low. Now let's get into your Tesla stock news today. Okay, let's start here because this is the craziest thing you have ever seen out on the roads. Ever. This guy that owns a Cybertruck is literally running a laundry machine. It looks like a dryer in the bed of his Cybertruck, connected to the Cybertruck outlet. I mean, I have to say this is like the best advertising I've ever seen. Just the amount of power that it's going to take to run a dryer like that through a cycle, and the fact that the Cybertruck can actually do that just shows how impressive the vehicle is. Here we can see in a new YouTube video posted by Brad Sloan, $40 million worth of Cybertrucks at Giga Texas outbound lot today. Here we can see in a new video posted by Brad Sloan, $40 million worth of Cybertrucks at Tesla's Giga Texas outbound lot today, which is just incredible. And it looks like we are getting closer and closer to that threshold of 1,000 Cybertrucks produced per week that we're trying to hit by the end of this year. Elon Musk reacts to this post shared by Sawyer Merritt and says, "Holy smokes." The post says NASA just announced that its Mobile Launcher 2 project will now cost $2.7 billion, up from an original estimate of $383 million. NASA says this project is key to its Artemis campaign, which seeks to return astronauts to the moon and send crewed missions to Mars. Tesla today showed off their Dojo supercomputer at Hot Chips 2024, along with some exclusive photos of what Tesla calls its Mojo Dojo Compute Hall, or MDCH, in New York. For Tesla's Dojo supercomputer, the company did not just make an AI accelerator, but also its own transport protocol over Ethernet, the assembly that houses the D1 tiles, all packaged together, which Cirdes enabled connections. For the New York location, they say, quote, "We can see 2U compute nodes without any front 2.5-inch storage," which is really interesting. And these are some of the photos of Dojo and some of the components that goes into each Dojo computer set, which looks like there's quite a few of them here in just this column. This individual on X writes, "I wonder if Elon still believes Dojo is a long shot." And we know that's no longer the case. Elon Musk said on the last earnings call, the demand for Nvidia products is so insane that pricing is at these elevated levels and might not come down for a long time, which is going to force Tesla to really utilize Dojo in its maximum form or capability. Elon Musk actually said on the last earnings call that Dojo will be able to compete with Nvidia chips. So it doesn't look like Dojo is seen as a long shot anymore over at Tesla. Now, whether or not that gets reflected in Tesla stock, or when that gets reflected in Tesla stock, only time will tell. Because it's definitely not getting reflected here today, Tesla stock at the time of recording this video is down about 2%, trading just under $205 per share. And yes, I know Nvidia earnings is really going to dominate the headlines for the next couple of days and maybe even the next couple of weeks as we head into a seasonally rough September. September over the past 4 years, we've seen a minimum decline of 4%, 4.1%, and a maximum decline of almost 10%. Who knows what we have in store for this September? But historically speaking, it's not a great month, especially with election concerns. That, is going to be problematic. But Nvidia earnings and what is said on the conference call could either help this market or hurt this market a lot. And I don't think we're really going to have a good understanding of the effect of Nvidia earnings fully until the conference call is over with around 6 p.m. or so Eastern Standard Time. Because it really doesn't matter what the earnings are from Nvidia, the conference call could change things dramatically for better or for worse. Elon Musk writes on X, after thinking it through, SpaceX Starlink will provide emergency services access for mobile phones for people in distress for free. This applies worldwide, subject to approval by country governments. Can't have a situation where someone dies because they forgot or were unable to pay for it. Which again, no matter how big of a hater you are on Tesla or Elon, you gotta respect that. Tesla has become the first car maker to enable direct integration with the Demo network, the connected car app. Over 20,000 Tesla owners control their car data, track car health, and earn rewards on the free Demo app with up to $15 a month just for connecting. Tesla has reduced CCS Combo 1 adapter prices in the US by up to 50%. Dan Priestley will share new information and findings about Tesla's semi-truck pilot program with PepsiCo at a live talk at the IAA Transportation event in Germany on September 17th and 18th. It is being reported that battery recycler Redwood Materials has topped out their cathode facility in Nevada, which will represent the US's first commercial supply of cathode active material. Eventually, the building will produce enough CAM to power 1.3 million EVs annually. What's also negatively affecting some of your semiconductors today and some of your big tech and AI stocks is this. Supermicro, SMCI, falls 10% after delaying their 10K filing for full year 2024. The company said additional time is needed to complete assessment of its internal controls over financial reporting. This comes just one day after Hindenburg Research accused the company of accounting manipulation. Yeah, not a good look here. And in fact, it's much worse than that because SMCI is down 27.5% at the time of recording this video. Sounds like Hindenburg Research had a little bit of insider information, to say the least. It does look like Tesla Korea just opened a new Tesla delivery center. Hyundai Motor Company held the 2024 CEO Investor Day today. They said that they will develop a digital cockpit based on Android Automotive. And yes, they got the idea from Tesla. Samsung SDI has announced that it will build an electric vehicle battery production plant in the United States with GM. It plans to invest 4.6 trillion won to produce 27 gigawatt hours per year, which can be mounted on 350,000 electric vehicles. James Cat writes on X, the Model Y refresh should sell very well with fewer incentives, helping auto gross margin. The Fed lowering rates will reduce the cost of financing, also helping auto gross margins. And I think that's really the bottom line for Tesla. Tesla has had to really incentivize consumers to go out and buy a new Tesla by buying down the interest rate, which has hurt auto gross margins, just to be able to make it affordable to go out and buy a new Tesla. And for the average person, it's still unaffordable to buy a new Tesla, or really to buy a new car in general. As the Fed does start to actually lower rates, then Tesla needs to buy down the interest rate less, or maybe Tesla could just take the interest rate to zero and just, keep buying down the same amount, but it would be offset a little bit by the Fed lowering rates. There's a little bit more optionality Tesla could start to employ, to give consumers the best deal, make it as affordable as possible to get a new Tesla, but also start to get auto gross margins even better again. Queensland's biggest battery will double in size after AGL signs a virtual contract. The BESS will consist of 140 Tesla Megapacks, 2 XL units, and is expected to start operations in 2026. And it looks like big funds are actually buying the dip in Tesla, with BlackRock that bought 1.71 million additional shares of Tesla in Q3. Well, I guess technically it would be Q2. You also have State Street that bought 2.13 million shares of Tesla stock in Q2 as well. Alex on X wrote this post basically mocking the naysayers around FSD that say it will never work without LiDAR or radar, it'll never work with just cameras, and Elon Musk laughs at this post, seemingly disagreeing with that. Elon Musk also says that Tesla FSD can predict events with AI diffusion model. This individual on X writes, by predicting the next frame of the classic shooter Doom, you get a playable game at 20 frames per second without any underlying real game engine. This video is from the diffusion model, and Elon Musk responds and says Tesla can do something similar with real-world video. The chief strategist at Wells Fargo says stocks will embark on a run of gains unseen in 30 years after the Fed rate cuts. And the stock that stands to benefit from that the most is Tesla, due to its cyclical nature, due to its sensitivity to interest rates. Not only is Tesla yes, a self-finance business, but they do occasionally go to the bond market and raise capital. The Fed lowering rates will make that a little bit cheaper to do. But also Tesla is in the unique position, for better or for worse, where 80% of new vehicles are financed. So that is literally your business is growing and to some degree reliant on the capital structure, right? Higher rates are not good for Tesla's growth endeavors, but also almost your entire customer base is dependent on interest rates as well. So as rates start to fall, that should really help Tesla out. As long as the economy is not weakening or going into a recession, then I do think stocks will react positively to the first Fed cut. But it all comes down to where the economy is at over the next couple of weeks, heading into September 18th. Also, as I said before, September is seasonally the worst month of any year. Specifically over the last 10 years, September's down 2.6% on average. That's bad. The only other month that is negative at all is December, and you're negative 0.2%, 0.2%. Like, September is by far the worst month. And this was some pretty weird news today. The US Labor Department acknowledges mishap in release of jobs data. I believe this is in reference to the major banks and financial institutions that got the jobs report before everyone else did. And the BLS says they put new safeguards in place to ensure equal data access. Option activity for Tesla stock today came in relatively good. You had 6 different trades totaling $1.23 million with a positive order value of 59%. Tesla's short interest of free float sits at 2.95%. Short sellers continue to cover on Tesla stock, which is a good sign for the bulls. The dollar amount currently sold short in Tesla is $17.17 billion, with 82.08 million shares that are sold short. Here today, you can see return shares, aka covered shares, of 107.5 thousand and borrowed shares of 133.1 thousand. So that means you do have on net about 25,000 shares that are being sold short today. But that's not that bad considering the catalyst that we had today. Google Trends data indicates the Cybertruck's falling quite a bit in search activity, down to 55, which is the lowest level we have seen since at least April 28th through May 4th. The Model Y is holding up quite well at 26. The Model 3 as well is holding up quite well at 24. The Model S is sitting at 10, and the Model X is sitting at 9. Sentiment over on StockTwits for Tesla is bearish today at 37. Yesterday it was bearish at 41, so people feel less confident about Tesla stock today than they did yesterday. In regards to retail investors, big money's not getting on stock twits, and that's why I like to look at this to really gauge retail investor sentiment. Message volume today is normal at 51. Yesterday it was normal at 52, and the participation ratio today is high at 55. As far as global inventory numbers, the Model X again has recently shot up to about 5,700. The Model S is sitting at 3,500. The Model 3 is falling a little bit to 6,000. The Model Y has been trending downwards as well a little bit to about 7,500 vehicles in total inventory. So let me know what you think about all of this information down below in the comments section. In the next video, we will be going over everything you need to know about Nvidia earnings, about the conference call, and what could be coming ahead in markets based on that, because that's going to be really the biggest event for markets this week. Hit the like button. Again, subscribe to the channel if you made it to the end of this video. If you guys want to come trade with us as well, check out that link down below in the description of this video. Put on some good trades today, had some big winners on SPY puts, and hopefully some of these earnings trades will be good as well. I think they will be, so come join us. You guys enjoy the rest of your day, and I will see you in the next one.